When people hear the word compounding, they usually think of interest rates or stock market returns. But for the ultra-wealthy, compounding goes far beyond money sitting in an account. They've discovered tools that don't just grow wealth, but multiply it across generations. These tools are rarely discussed in public. They aren't taught in school. And you won't find them in your typical financial advice video. Today, we'll uncover 7 unconventional compounding tools the wealthy quietly use to grow their influence, protect their assets, and build legacies that last centuries. Make sure to like, subscribe, and click the bell, because what you're about to learn might shift how you build wealth forever. Let's begin. 1. Trusts. Compounding control, not just capital. Trust isn't just for legal protection. It's a tool for compounding control over assets. Wealthy families use dynasty trusts to pass down money without triggering estate taxes. This means wealth is protected for 100+ years, growing tax-free, uninterrupted. But here's the secret: they also set rules within these trusts on spending, investing, even behavior. So, the values and vision compound alongside the money. In effect, it's not just wealth that compounds, it's structure and intention. 2. Private equity. The real compounding machine. While most people chase public stocks, the wealthy quietly put their money in private equity. These are businesses not listed on the stock exchange. Why? Because owning a business, especially early, means exponential compounding of value. Private equity gives them control, higher returns, access to growth before the public sees. Warren Buffett didn't get rich off stock tips. He bought businesses. And those businesses compounded faster than any index ever could. 3. Intellectual property. Compound once, earn forever. The wealthy understand something few people do. Assets that pay you forever are more valuable than assets that pay you now. That's why they create or acquire intellectual property, IP, books, patents, music rights, licensing deals, digital products. Create it once, and it earns for years. Even better? It scales globally with zero extra work. This is how authors, inventors, and investors make money in their sleep. They don't trade time for dollars. They compound creativity into streams of income. 4. Reputation capital. The invisible multiplier. You won't see this on a balance sheet, but reputation is one of the most powerful compounding tools the rich leverage. Why? Because trust scales. A strong reputation opens doors to private deals, investor trust, speaking gigs, brand partnerships, legacy building, influence. One great reputation can create decades of opportunities. The wealthy protect it obsessively. Because once it compounds, it becomes a magnet for more money, more access, and more leverage. 5. Strategic philanthropy. Compounding legacy plus influence. To the average person, charity is a donation. To the wealthy, it's a strategy. They build foundations and donor-advised funds that allow them to control how their money is used, to get massive tax advantages, influence social, political, and global outcomes. It's not just about giving, it's about directing capital with purpose. The compounding effect? Their name, brand, and legacy last long after they're gone. Think Rockefeller, Carnegie, Gates. Their influence didn't die, it multiplied. 6. High trust networks. Compound access, not effort. While others network for jobs or gigs, the wealthy build high trust, high leverage circles. They don't chase opportunities. They create ecosystems. One conversation can lead to a billion-dollar merger, a new funding round, a 10-year strategic alliance. They're not just compounding money. They're compounding access and proximity. In their world, who you know and who knows you can be more valuable than what you own. 7. Time delegation. Compounding energy, not just hours. You can't make more time. But the wealthy know how to multiply their time's impact. They hire elite teams, assistants, strategists, analysts, chefs, trainers, tutors, and advisors. By delegating everything that doesn't multiply their mission, they focus 100% on high-value activities. This creates a loop where their energy compounds, allowing them to think bigger, decide faster, and recover better. They're not just working harder. They're compounding focus. Closing thought. The biggest myth in wealth building is that compounding only applies to money. But for the wealthy, compounding is a universal principle. compound control through trusts, compound ownership through equity, compound income through IP, compound influence through reputation, compound legacy through philanthropy, compound access through networks, compound time through delegation. You don't need billions to start. You just need to shift your mindset. What in your life can compound without more effort? Because once you start thinking like the wealthy, you'll stop chasing money and start building unstoppable momentum. Which of these compounding tools surprised you most? Comment below. We'd love to hear what you're going to apply in your own journey. Don't forget to like, subscribe, and click the bell, because we've got more untold financial strategies coming your way. Thanks for watching, and remember, the secret to wealth isn't speed. It's strategy, multiplied by time.